It's commonplace for traders to regularly lose money by trading in a manner which they know they shouldn't be, which means they are not following their trading plan. Now, this is assuming that the trader has taken the time to actually put together a trading plan for their strategy based on testing and statistics. When markets change their type of activity and they start moving quickly, for example, traders who are slow to adapt to these shifts can get caught out, and in the frustration of the moment, they start to trade erratically. Discipline and self-control are not present, and in the end, this can lead to a disaster for their account and their psychology. And this is just one possible example of where a trader might feel that they need to exert more trading discipline and control. Now, trading setups are part of the equation, and although many traders spend too much time focusing on just that one aspect, many don't know what their trading setup even is. I'm talking about a precise definition of their setup that tells them when to take a position in the market. And you've probably heard traders talking about how they'll take a position when they like the look of the market. Well, that problem is pretty much throughout this entire business, and in particular, the retail world. People just don't have a clear enough plan to trade any market. And it doesn't matter if your setup is based on a technical analysis indicator or a candlestick chart pattern. If your trade plan is ambiguous or even non-existent, you might be able to get away with it for a little bit. But when things start to change and the markets heat up, it is a mammoth task to maintain a clear idea of how you're trying to trade. And when a trader loses focus, they lose their trading discipline. One loss is going to turn into many losses. Now, focus and being in the moment as a trader is a great trait to have, and it can be a powerful influence on your trading success. It becomes an issue when that focus is too much and you start to lose track of what's going on outside of your little window. Now, I used to trade with a guy who would block off his entire day into 30-minute periods in order to maintain his focus. That becomes a problem when the bigger picture of the market is being missed by the trader. Do you know who trades those larger time frames? The bigger players. Those who move the markets, they don't get caught up in the ebb and flow of the smaller time frames. The big time frames, the daily chart, weekly charts, even the monthly one, that's their trading domain. These higher time frames can have a huge impact on the market changing gears. And if you're trading an intraday chart and you take a trading position long into a higher time frame resistance area, what do you think is going to be the probable outcome? And a rule of thumb is to expect support and resistance to hold until you're proven otherwise. That intraday long will probably end up pulling back against you. Now, you don't have a never-ending stream of discipline or willpower. There's going to be a time that a lack of trading discipline is front and center, and you have to have a way to deal with that. And what happens is that as you have to make more decisions and your energy level drops, you become more susceptible to decision fatigue. If lots of things are happening in the market and your trade plan is a tad ambiguous anyways, there are two big problems as decision fatigue sets in. Number one, you're less able to make sense of what's going on in a timely manner. And obviously, as volatility picks up, acting swiftly can be critical at times. And due to the ambiguous nature of your trade plan in the first place, and the fact that you've probably had some losers that session, and at the very least some pretty close calls, your chimp brain starts to erode the control that your human brain has. Taken to the extreme, decision fatigue can lead to fear, flight, or fight, and that's not a state that's conducive to a proper trading approach. So do you really need more trading discipline to follow your trading strategy? Well, I can't say for sure, as each person is different, but certainly for most people, that is not the right place to start. The right place to start is to assess your trading plan for clarity. Then you need to, on a daily basis, plan for and pay attention to what the bigger picture context of the market is in order to make sure that you're aware of any changes in the market. If your trading plan is clear and the number of actual decisions you need to make are lower, well, that can only be a good thing for a trader. And if you're a day trader where you face many decisions during your trading session, you are at a bigger risk of decision fatigue than a swing trader. Having a trading rule for virtually everything that you're going to encounter during your session, it's another burden lifted from your decision-making muscles. Now, these factors are not going to eradicate the chances that you're going to lose your discipline. That risk is always there, but it's a good step forward for successful trading. What can be really beneficial in sensing the balance of power within your own mind is using the strategy of practicing mindfulness as you trade. The issue is that when there's more action, you're naturally inclined to want to sit at your desk for longer. Unfortunately, that's only likely to make you more susceptible to mental fatigue and therefore decision fatigue. In turn, your chimp might show up, and that's clearly something to avoid if that's possible. Mindfulness can help you to maintain self-awareness and get you to take more breaks than you normally would so you have the chance to recharge. So before you start thinking that you have terrible trading discipline, be sure to take a proper look at the circumstances under which you find yourself losing.